All right, in this video, I'm going to show you some Wall Street Journal archives from 2007 and compare those to the narrative of 2023. You got to remember 2007 was right before the 2008 Great Financial Crisis, which was the largest financial disaster since the Great Depression, just a global catastrophe. And it's really interesting. We put together this 28-page report, and this is just a few pages out of that report. We talk about yield curves and bond markets and stock market performance relative to rate hikes and rate cutting cycles from the Federal Reserve, how the market historically plummets. Talk about real estate supply and demand, affordability, bank trouble, commercial real estate. Talk about wages, incomes, and ultimately where opportunities may lie. So nothing here is financial advice, all just information willing to share. Just send an email to 24, that's 24 at code3assets.com. We'll send you the full report for free. It's no worries. But I want you to understand nothing here is financial advice, just sharing information that we are looking at so that maybe you can take a look at it for your own consideration. But here, I want to point out this article. Let me make it a little bigger for you. Point out this article that in July 7th, 2007 is the Wall Street Journal archive date here. So it's talking about strong jobs data, signal economy is gaining steam. So we've heard a lot about recently about a resilient jobs data. And then we talk about, here, this is just a chart in the background showing declining unemployment. Unemployment rate below 4.5. We're lower than that now. And it's talking about here Goldilocks moment. And then I thought this was interesting. It's referencing uncomfortably high inflation that conjured images of the 1970s. So that's a narrative we heard a lot in the last couple of years. And I was really shocked to see just how similar that was. Now, let me show you a different page here. This one is dated December 6, 2007. And again, Wall Street Journal archive. And it's talking about gains in the stock market underscore resilience in the economy and global growth. It's talking about expectations of GDP growth in the upcoming year and quarters. And it's strong economy here, more references of that. Really interesting how much of the narrative is actually the same. Down here, it's talking about the 10-year Treasury falling lower to about 4.025%. Today, the 10 years around 4%. And the thing that really blew my mind was right here, Countrywide Financial. And it's talking about, let's see, what's it say? The nation's largest mortgage company advanced 16% to $12.10, capping a two-day run into stocks has climbed more than 20%. Well, the reason that matters, if you studied the Great Financial Crisis, Countrywide Financial was ground zero. I mean, the actual epicenter that of the financial crisis. It was issuing these terrible mortgages that ultimately led into bank and credit problems. And they absolutely went bust. So here the news is talking about how great they're doing, and they're bust a short time later. So let me show you one more. Now remember, this is December 6, 2007, talking about how great everything is looking. Well, recessions are always dated back. They got to get data, which is historical and reporting. So they always go and backdate the official start of a recession. So this article is December 1st, 2008, 1 year later. And it talks about right here, the official start of the recession, the greatest financial crisis since the Great Depression, was December of 2007. So the point of this video is to remind us we got to be careful about just listening to the mainstream narrative, because the business cycle, well, it's a cycle. There's ups and there's downs, and generally there's a significant period of years between those cycles. So we have recency bias. We start to just forget about, or maybe we were too young at the time to see what happened then, and didn't have a reason to pay attention or whatever. So all we've known is sunshine and unicorns, and we start listening to the mainstream media, and we hear sunshine and unicorns, the politicians, sunshine and unicorns, and sometimes we miss the data. So that's why I wanted to share this. Be careful, listen to the experts. These are the same people talking then that are talking now. Now, nobody knows what'll happen, but we can look to history and we can look to data to kind of get what the best or the most likely thing is to happen, what the probabilities are, so that we can kind of hedge our risks, look for opportunity, and find a way to kind of navigate 2024 while insulating ourselves some of that exposure, while also looking to maximize returns. So just send an email to 24 at code3assets.com. Send you the whole report. Take care.